Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Thank you for stopping by this session on equity investment. My name's Jimmy Rippon. I'll be hosting the panel this afternoon. We're going to go into a few details about going for first-time outside investment for your business. I can imagine as a founder or as a business owner, going out to market for investors is quite an exciting period in your business, but also potentially a little bit scary, maybe. So hopefully we'll alleviate any of your concerns or apprehensions you might have, answer any questions you might have. We'll do a Q&A at the end as well, and hopefully you'll walk away feeling a little bit more confident than you did prior to being here. So please join me in welcoming our panel this afternoon. We have, on the end, the founder of Inside Investor Relations, Graham Rowan. In the middle, we have Rupert Lyle, Fund Principal at Future Planet Capital. And beside me here, the co-founder of the British Design Fund, Damon Bonser. Welcome, guys. So before we kick off, I thought we might do a quick show of hands just to gauge who's here and what stage of business you're at. Could you put your hand up if you think you're in sort of growth mode and you've got an experienced business or an established business, rather? A couple of established business, good, lovely. What about if you're in that startup mode and you're very much seed or pre-seed? Okay, good to know, good to know. Right, Graham, I'll kick off with you. You've been working with founders finding investment from private investors for a few years now. What would you say before money even comes into the picture? What are the things, the traits? What's the one thing maybe that investors are looking for in founders?
Okay, well, I'll answer that in a moment, but the first thing I want to say is I think we should have one of those giant World War I Lord Kitchener posters that says, you know, your country needs you, because at the moment, you know, those jokers in Westminster are talking about growth, but the growth's actually going to come from the people who are here today at the Festival of Entrepreneurs. So I salute you for being here. And also I would just say that, you know, as someone who works a lot with private investors, there are three constant questions going around a loop in their mind, which is, do I like you? Can I trust you with my money? And do I believe that you can deliver? So always have those three things in mind when you're talking to private investors. But if you ask me to nail it down to one thing, well, you know, you're choosing a road less traveled as an entrepreneur. If it was easy, everybody would be doing it. So I think for me, I would say resilience is the most important thing, the ability to bounce back. You know, if you remember that song, I get knocked down, but I get up again. Well, that's kind of the life of the entrepreneur. And as an investor, I want to know you've got that resilience. Either from things you've done in your business career, or even, for example, I raised money for an investor or a founder last year, and you know his CV was okay, it wasn't brilliant, but then I dug a bit deeper and I found out that he had been the coach for his national Olympic ski team. So he'd worked at the highest level of elite sport, and that's certainly one area where you know you need focus, determination, sacrifice. So that really helped me to feel he was the right person as a founder. So for me, I would say resilience is that key thing.
That's really interesting. Thank you. Rupert, what's your take in your experience? What sort of traits are you looking for before even numbers are spoken about?
Hello. Yep. The key thing for us is people. No product or service can sell itself. No product or service can create its own business. It's all about people. And as a founder, you will be experiencing probably the loneliest job in the world. And it's how you cope with that emotionally, as well as strategically and financially, that is key to whether or not you're one of the 10% of businesses that survive or not. So, you know, from our perspective, it all comes down to the people. What the business does today is sort of irrelevant because we're not investing in what it does today. We're investing in what it becomes. and we make judgment calls on whether or not the founder entrepreneur has the ability to even get it to the first stop on that journey. Because what we know is that no founder or entrepreneur are the perfect long-term chief executive of that business. Interesting, Richard Halpin was here this morning and he put a post on LinkedIn this week and he said the decision that made HomeServe a £4.5 billion company was his decision to step down as chief executive. And founders need to realize that in actual fact, they start a business because they've got an itch they want to scratch. But that doesn't prepare them for running a business. They know nothing. What they know isn't knowledge, and it's how they learn, how they adapt to circumstances. I think resilience is one of the key things, but there are a number of things that make up resilience. But it's all about the people.
Interesting. Do you think traits like humility are traits you look for in a founder, being humble, or are you after founders who are just completely 110% all the time, or are you looking for?
Well, I mean, it's interesting. Founders are 50% more likely than the general population to suffer from mental health issues. They're 200% more likely than the general population to suffer from addiction. They're 300% more likely to suffer from anxiety. So it's not an easy job. And all those things go to resilience. And it's how you cope with the internal turmoil as much as the external turmoil is absolutely fundamental as to whether or not your business will be successful.
Interesting, thank you. Damon, you've invested in a number of businesses. What traits are you looking for in the founder themselves?
Yeah, so resilience, obviously, but it's very, very hard. Can you hear? It's very hard to figure that out before you put the money in. So the things we look for ahead of kind of writing a check, if we involve them in some process and we've maybe known them over a few months, going up to 6 months, maybe we've seen them before they've applied. The things we sort of look for is their consistency in what they're telling us throughout that journey, throughout before they even come and apply to us, before they pitch, and then when we're doing commercial DD and all the rest of it. Is there consistency? Like, is there honesty there, and are they kind of passionate about the sector that they're working in? But yeah, it's like the reason it's most of the challenges we have at companies is not around a technology that they can't get through to market. It is around the individual and their ability to take on the sort of stress of going on that journey. But yeah, so like we've all sort of said it, perseverance, but it's really hard knowing that before you put your money in. You sort of figure that after a year or so.
Yeah, okay, fair enough. I mean, really early on, are there any behaviours that would build trust quickly? Are there anything you would see in those early conversations that would build that trust and fill you with a bit of confidence?
Yeah, well, I think it can be as simple as saying what you're going to do and then doing what you say. So if you say, I'm going to send you the deck tonight, and it doesn't arrive until tomorrow afternoon, I'm already thinking, hold on a minute, So it can be very simple things, just deliver on the things you say you're going to do and prove yourself trustworthy. And also, I think, back to your previous point, I think you've got to be confident, but you've got to avoid being arrogant. And that's quite a fine nuance sometimes. You've got to give the impression of knowing where you're going, because you've got to take the investors and people with you. But if you don't have a little bit of humility and a little bit of, stopping short of getting too arrogant, that's kind of key, I think. But also, we're looking for some kind of experience, something that proves, you can do this stuff. And not everyone's cut out for it. I was talking to a guy here today who's a very successful business owner and property investor. And I said to him, okay, you're not in the first flush of youth. What's your succession plan? He said, "Oh, my kids couldn't possibly take on this business. You know, they all want to be YouTube influencers and things. You know, so you know, you've only certain percentage of people, maybe it's 5, maybe it's 10%, have got what it takes to be a successful entrepreneur. And our job is to try and find that from very incomplete information."
I was sat in on the debt session here a couple of hours ago. So businesses are looking for loans essentially, and the banks and the alternative lenders said almost the same thing. It's like if you're not honest from day dot, they just can't trust you. So it sounds like honesty is a trait that, yeah, helps in life, also in business.
I think one of the key things, Jimmy, is also having a vision. And again, that goes back to actually what you're doing today is sort of irrelevant. And if I use the example, you know, Jeff Bezos always wanted to create the everything store, and that was his North Star. But he started with books. He couldn't have started with everything, not least because there wasn't a parcel delivery service back then that could cope with everything. So he needed something that would go through people's letterboxes. So he started with books, and it's having that vision that captures people's hearts and minds, because otherwise, if you don't capture my heart and mind, you're just a stranger I've never met before, who's probably never run a business before, that's asking me for hundreds of thousands of pounds worth of investment. And that is a very, very difficult ask.
Absolutely, I can only imagine. Almost flipping that first question on its head, Damon, what are some red flags that would make you walk away in those early conversations?
So yeah, like kind of the negative of what we said on the first question, so kind of not being obviously consistent and honest. But I'd say like an inability to articulate how you're going to commercialize your business in, you know, without using technical jargon. Just tell me where's the flow of that money, like, you know, who are you going to sell it to? Who are your first customers? How are you going to get hold of them? How much is it going to cost you to access them? But just talk to me in layman's terms, how we're going to commercialize this, and don't sort of dress it up and fill it with technical jargon. Talk to me as a, you know, as a layman. Just explain where's the money in this business.
Okay, cool. What about you, Graham?
Yeah, I think one of the things I would be looking for is skin in the game. You know, I had a guy come to me last year who came out of the academic world, and he was used to being given research grants and then going off and doing work. And he decided he wanted to launch a business. And he came to me, and it was kind of like, well, you know, this is the plan. And I said, okay, how much money have you put into this brilliant idea you've got? And he looked at me like I was from another planet and said, what you think I put money into this? That's your job, you know? And I thought, you're crazy, you know? So I'm quite brutal about this. I mean, I quite like it when they've remortgaged their house, and if the business fails, they're going to be out on the street, you know, because then I know I've got their full attention and their commitment.
Yeah. Yeah, what about you, Rupert? Any red flags that you can think of?
Yeah,
off the top of your head?
a couple of red flags. Arrogance is a huge red flag. I mean, it's amazing how many people that we meet that actually think they've made it. You know, they've already banked the money, and you know, we're the lucky ones for being invited to invest in their business. And as I said earlier, 90% of businesses fail. So you know, there is no such thing as a certainty in this world. So humility is key, and in that regard, understanding. Thomas Edison said, "A vision without execution is a hallucination," and you need to know how you're going to execute. Okay, some of that's a bit crystal ball gazing, but understanding your own strengths and weaknesses, understanding how you build a team, understanding how you address the distribution or production or procurement, you know, not understanding any of that is a huge red flag. And I think the final one is I'm an investor, I'm not a customer. I don't understand the problem that you're trying to solve. And as a founder, you spend 24/7 thinking about that problem and the solution. I don't understand your jargon. I don't understand your acronyms. you need to make it simple for me to understand. And if I can't understand it, then I'm not going to be able to persuade my investment committee to back my judgment on this. So making it really simple, having a simple story that starts with a problem, comes up with a solution, tells me how that business is actually going to execute on delivering the solution, and having a founder who is up for learning will get my attention every time.
Just one thing I'd add to that on that very point. When I'm working with founders, I try and get them to come up with a kind of a catchy phrase that summarizes it in terms that anyone would understand, like we're the Uber of last mile logistics, or we're the Amazon of medical devices, something like that. Oh, right, okay, now I kind of see where you're going with this. You know, just coming up with that little catchy phrase or expression that summarizes a more complex model underneath is really helpful when you're talking to investors.
Okay, that kind of leads me into my next question. I mean, Damon, are there any mistakes that you see time and time again in those early conversations or those early pitches?
Maybe it's tricky. Yes, I mean, it's part of our sort of filtration process, I suppose. By the time they get through to pitch to us, they're doing pretty well. We've filtered out a lot of the ones that make mistakes, but I guess probably. Okay. Hopefully, I'm not taking one of your future questions. I won't. But one thing would be kind of misunderstanding how to value your company, and thinking maybe you might have some. It sounds like a terrible word. We might have some, let's say, unsophisticated investors that are willing to back at a certain price because they're passionate about you, or they're passionate about the problem. Maybe they're not maybe seasoned investors, and then you as a founder have obviously taken those funds in, set that as your value, but you're not thinking then about actually what are you going to achieve with that money to get to the next point? What's the next round look like, and the round after that? You know, is it still going to be an attractive proposition? And it's really difficult for us as investors. We don't enjoy going in necessarily on a down round. So we often will just say no to it because it's just too much hard work trying to convince someone who's already got maybe a couple $100,000 in at a certain price. And we're coming in as a sophisticated investor doing DD and mapping out their kind of future funding rounds and what they're going to look like and what the KPIs are. But it's a really difficult conversation if the founders sat there and they're saying it's already priced. But we would look at it and say, you know, we're seeing a lot of deals like it's overpriced. You are going to struggle kind of further down the line to maintain growing that share price. But it's a very difficult one. Yeah, it's hard. For us, it's kind of we just don't entertain it. We say, great, okay, we're not going to get into a conversation around it. It's too far from sort of reality.
Okay, thank you. Yeah, you did kind of touch on my next question is how do those founders go into those early conversations? How do they go about the process of valuing their business? And are there any bits of advice you could give around the valuation side? Rupert, you look like you've got a thought.
How long is a piece of string?
This is it.
I mean, there are a number of metrics. There's the good old-fashioned one, which no one takes any heed of anymore, which is multiples of profit. There's multiples of turnover. There's benchmarks from other transactions in the space. But at the end of the day, it comes down to what somebody is prepared to pay, and you know, it's an illiquid asset, and what an investor is prepared to pay for that asset is actually what the business is worth.
A good point, yeah.
Just coming on that, I mean, there's a couple of mechanisms you can use if it's really difficult to value a business. One is called a safe note. It's a simple agreement for future equity. So we've just done a raise for a space exploration company that's going to have some mega projects, but they're not quite there yet. So what we've agreed is effectively a 30% discount to whatever the first valuation ends up being through that safe note structure. And another one you can do is a convertible loan note, where effectively it starts out as debt, but at some agreed future point, it can be converted into equity. And that's a kind of an insurance policy for the investor against a bad valuation. You know, so you're going to wait and see how they deliver over the next 12, 18 months, and then decide if you want to convert that into equity or not. So, but it is one of the hardest things to do in a young company, you know, and really, you know, part of it is having a number you can defend with some kind of metrics, and that you can keep a straight face when you're saying it. That's an important point as well. So yeah, but it is probably the hardest part of all of this. Is that business worth 5 million or 25 million? And often we'll find founders have a very inflated idea of what that number should be.
Yeah, all I'd kind of add to that is so for founders, try and think of, you know, if you're pitching to a VC, think that they are going to have a target return. So if you can confidently articulate your journey from where you are now and the valuation you have to your next raise and what those key metrics are, and show to your, like, give your investor confidence that actually, yeah, when it came 5 years, we can see a sensible pathway that this is going to be 10, 15 times the value we're going in at. Like, it's not pie in the sky stuff. These are sensible metrics and KPIs that you can achieve that will drive that valuation up. That's sometimes the easier way of thinking about it. Sort of, can you confidently explain that journey of valuation uplift?
Do you find more often than not, founders do have an inflated price in their head? And going back to your point about humility and honesty, do you find that maybe those that come in early with a realistic valuation, are you drawn to them instantly?
For us as a fund, we have, like, part of our sort of selection processes, we have a valuation range that we like to operate within. So if it's outside of that, one of the analysts will have a quick conversation about how, like, is this actually a priced round, or is it a safe note, like a ASA or something? Like, is it really truly priced? Because if it is and it's outside of our comfort zone, we may as well just stop the conversation there. But I think kind of if it's an unpriced round and you're with the right investor, you know, and again, it's got to be a match on both sides. The founder's got to be comfortable with the investor and vice versa. It shouldn't be a one-sided conversation. If you're kind of in a situation where you're just getting beaten down by your investor and you're unhappy on day one as that check's coming in, that's going to be a terrible investment. Like, it's not probably going to work out very well. So you should be able to have a sensible commercial conversation around where have you determined that value from? Like, where's that come from? You know, is it a priced round from maybe unsophisticated investors? That's tricky to overcome. Is it just actually misunderstanding, or have you actually banked a lot of IP? You know, is there a big order book sat there that we haven't really sort of delved into? You should be able to have a sensible commercial conversation around it all and meet somewhere in the middle, and both feel confident to move forward. But if it's very one-sided from either the investor or the founder point of view, it's unlikely to work out.
Yeah, I think something else to add is raising money from any investor is a bar that no one realizes quite how high it is. Last year, I think we had 1,200 decks sent to us, and we invested in 8 businesses. And if you are fortunate enough to receive a term sheet from a VC, then for God's sake, don't look a gift horse in the mouth, because you are in a very, very small number of businesses out there who ever get a term sheet from a VC. And if that VC says, we think your business is only worth Y, it's not because they're trying to, you know, minimize your equity upside or mitigate the influence you have on the business. It's because they genuinely believe that that is the valuation at which they can invest and make a return. Because fundamentally, we invest to make a return. There's no beating about the bush in that. Investors give us money to invest in businesses, which is why we set such a high bar. So if you're fortunate enough to get a term sheet from a VC, then don't drill a hole in your own boat. You know.
I'm cognizant of time, guys. And you touched on decks. I don't think we can do a talk like this without talking about decks. what do you look for in a seed stage deck? Is there anything that is a non-negotiable to include? I'm sure there's a few.
I think the main thing I would say about it is a lot of the time there's just way too much in them. It's kind of a less is more thing. I mean, I think with the whole point of the deck is to get me intrigued to know more. You're asking me out on a date. You're not proposing marriage at that point. So for me, it can be 10 slides. And it's going to be the problem. It's going to be why we need this, why now. What's the solution? Who's involved in the team, because it's always the people you're investing in at the end of the day. What are they asking for, and have they given any thought at all to an exit for investors, because they normally haven't. So keep it simple, not 10,000 words. I don't want war and peace, but enough to intrigue me, because you got 1,200 decks and you got to stand out from all that crowd. It's got to have something really intriguing in it. So, put a lot of thought into what's going to catch my attention. I can always get the detail later. I don't need it all up front.
Point.
Yeah, I mean, a fantastic example of that. Tell a story, because it's a story that will capture my heart and mind. I'll just get bored with technical detail or jargon or that sort of stuff. And one of the best examples of that is that we got approached by a lady, Birmingham-based business called Nyla's Naturals, and she started her deck by saying there are 400 million black women in the world with afro hair who are suffering from alopecia, and my mission is to address that. And you read that and you go, fucking hell. That's got my attention. And from that forward, in the very first meeting, she came to us saying she wanted 400 grand. And at the end of the meeting, I said, you don't need 400 grand. You need at least $1 million. And we'll give you half of that. and that was because her opening pitch wasn't about numbers. It wasn't about anything. It's about, here's a massive problem, and I'm going to solve it, and I'm going to solve it like this.
How about you, Damon? Any decks that stand out, and any reasons why they stick in your mind?
I mean, it's like the guys have said here, really. Get that hook in there. Oh, if we're ever kind of coaching teams on preparing decks, and if they're standing up on a podium or emailing out, I always sort of try and get them to imagine, you're in a place like this, maybe you've got 200 people in the room, there's only going to be a handful of them that are probably relevant for your business that actually have some cash. And the worst thing you can do is kind of overcomplicate your first few slides so that those 3 or 4 people in the room would be the only ones that would invest in your business, start looking at their phone, checking emails, and miss your hook. So I say to them, just nice and simple, like, what's the problem? Make it impactful. Ideally, get people to sort of lean forward in their chair a bit and say, like, you want the response of being like, I feel like I should have known that. How is my reaction should be, surely this has been done before. Surely,
Right.
How do I not know that? That's the sort of reaction I look for in the start of them. And then the other bit I'd say is, when we've all said it here, like, avoid that technical stuff. I should be able to flick through a deck, put it down, go out, meet a mate in a coffee shop or a pub, and I should be able to re-pitch your business to them. I should get the fundamentals so easily, like the problem, why it's important, how big it is, and how you're going to solve it. I should be able to wander out from my office, bump into someone, and say, "Oh, God, I just saw a really interesting deck. This is what they're basically, this is what they're doing." But there's a lot of decks you get, you read it through. Once you put it down, 5 minutes later, you're kind of scrambling to try and explain it. Those are not good decks.
Thank you, guys. Really, really sound advice. Thank you for your time. I hope that was helpful, everyone. Thank you.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.